Hey everyone, it is Julie here with TipRanks, and today we're taking a look at some of the best rated stocks from the past week. So let's get into it. All right, guys, welcome back. Thank you all so much for being here, and TGI Friday. Today, we're taking a look at some trending stocks from the past week. So a few of the best rated stocks that have been getting a lot of attention from Wall Street lately. We'll take a look at these companies, what it is that they do, what has them trending with Wall Street analysts, and what they're predicting for the stock's future. You can follow along with these stocks over on TipRanks.com or by downloading the TipRanks mobile app. And if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Let's get right into some of our best rated stocks. First up, we're taking a look at CrowdStrike Holdings. Trading under the ticker CRWD, they're currently priced at $346 per share. Year to date, they've climbed nearly 35% and are up 4% in the last 3 months, and you can see recently jumped up here earlier this week. CrowdStrike provides cloud-based solutions for next-gen endpoint protection. They are a cybersecurity company that offers a cloud-native platform to protect people, processes, and technologies from cyber attacks. Their Falcon platform uses artificial intelligence and endpoint detection and response techniques to prevent breaches before they happen. Shares of CrowdStrike took a jump earlier this week after the company delivered a strong Q1 report on the 4th that involved both an earnings and revenue beat. CrowdStrike reported Q1 earnings per share of 93 cents, beating estimates by 3 cents per share, and their revenue came in at $921 million, beating by over $16 million. The company also saw their ending annual recurring revenue grow 33% year over year to reach $3.65 billion. So this strong quarterly report is what has CrowdStrike trending among Wall Street analysts. They have 37 ratings altogether, and 27 of those have come in just the past week, many analysts reiterating and increasing their price targets following that report. One of those is a 5-star analyst from Citi. They said CrowdStrike remains a robust buy amidst market challenges and strong growth trajectory. Reflecting on their quarterly report, they emphasized the company's revenue beat and a record first quarter in net new ARR, which underscores the momentum in platform adoption and solid execution. They said the subscription revenue particularly stood out, driving the majority of the outperformance. The CrowdStrike stock does come in as a strong buy. Out of those 37 current ratings, only one of them is a hold. And the average price target comes in at $400 per share, implying an upside potential of over 15% from current prices. Looking at our big list of ratings all coming in here in this past week, a lot in those mid-teens. We do have a low-end price target recently here, with an upside of 1.75% and a high-end price target with an upside of over 26%. Our second trending stock is MongoDB. They trade under the ticker MDB, currently priced at $233 per share. Now their stock is actually in the red year to date, down over 42%, about the same in the last 3 months, and you can see it's dropped off here in the last week as well. MongoDB is a document database. They help developers build scalable internet applications. Their popular NoSQL database can store and manage structured and unstructured data, including large amounts of data. They're well suited for use in cloud computing, big data systems, social networking applications, and news site forums. Their stock has been dropping following their latest quarterly report that came out on May 30th, and this is despite an earnings and revenue beat, as the company's future outlook left investors wanting more. For their Q1, they reported earnings per share of 51 cents, coming in 13 cents ahead of analyst expectations, and total revenue came in at $450.6 million. That outpaced estimates by over $10 million and grew 22% year over year. The company did say that they had a slower than expected start to the year for both Atlas consumption growth and new workload wins, which will have a downstream impact for the remainder of fiscal 2025. Their second quarter outlook of $460 to $464 million trailed the analyst consensus of $471 million. Now, MongoDB is trending with Wall Street analysts following this report, with many of them reiterating their ratings. Now, many of them are maintaining a buy rating on the stock. However, we're seeing a lot of them reduce their price targets. That included an analyst from Needham. They acknowledged the company's slower than expected start to the year, but said despite these initial setbacks and the consequent drop in share price, they did maintain their buy rating. They understand that while the market adjusts to the revised fiscal guidance, the underlying fundamentals of MongoDB and the corrective steps taken by management to refine its go-to-market strategy are likely to yield results. This strategic pivot, combined with their strong position in the data analytics and infrastructure software sector, underpins the rationale for the continued endorsement of the stock as a good investment opportunity. MongoDB currently has 28 analyst ratings, with over 20 of those coming in the past 7 days. It does come in as a strong buy, with 22 buy ratings, 5 holds, and 1 sell. The average price target comes in at $352 for an upside potential of nearly 51% from current prices. You can see, though, we have a wide range of price targets amongst analysts. Looking at some of our more recent ratings, a lot in the 20 to 40% upside potential. High-end price target here from Citi at $480 for an upside of 105%. And we have to scroll a ways back here, back to March to see our 1 sell rating here, and that has an upside of 26%. And our third trending stock is Ultragenyx Pharmaceuticals. They trade under the ticker RARE, or RARE, currently priced at $42.72. Year to date, the stock has fallen over 10%, dropping 16% in the last 3 months, but more recently seeing some recovery, gaining over 6% this past week. Ultragenyx is a biopharmaceutical company focused on the treatment of rare genetic diseases. Their focus is on creating therapies for conditions that often have no approved treatments and a high unmet medical need. Their research spans 3 therapeutic areas, with metabolic, neurologic, and orthopedic. They have several products on the market, including Mepsevii, which is an IV used for the treatment of mucopolysaccharidosis, and Dojolvi, which is used to treat long-chain fatty acid oxidation disorders. Their stock is trending with Wall Street not because of a recent earnings report, but because of one of their phase 3 studies recently meeting its primary endpoint. On May 30th, the company announced positive top-line results from their phase 3 study of their DTX401 gene therapy. This is for the treatment of glycogen storage disease type 1A. Management said that this is an incredible milestone for the program and that these clinically important and statistically significant results are consistent with their phase 1 and 2 findings. This positive trial data not only has a bunch of Wall Street analysts reiterating their buy ratings, we've had 15 in the past week, but we're also seeing a lot of them increase their price targets as well. That includes one analyst from Cantor Fitzgerald. They noted the positive top-line phase 3 data meeting the primary endpoint, and also said that they did not expect the program to alter sentiment towards Ultragenyx, which remains quite mixed, but they do believe the next few potential catalysts for the stock this year could lead to a reversal in performance. With 17 total analyst ratings, the Ultragenyx pharmaceutical stock does come in as a strong buy based on 16 buy ratings and just 1 hold. The average price target of $92.44 would imply an upside potential of 116%. But once again, we do have a pretty wide range of price targets coming from analysts. Looking down below, our high-end price target is at $135 here for a whopping upside of 216%, while on the low end we have a hold here from Wedbush with an upside of just 12%. So that is a look at 3 stocks that are trending with Wall Street analysts this past week, all picking up a lot of buy ratings, though we do have some with decreasing price targets. Let me know your thoughts on these 3 companies in the comments down below. I always love hearing from you guys. Of course, keep in mind these videos are never a suggestion to buy or sell any specific stock, just keeping you up to date with what those analysts are looking at, so please always stick to your own investment plan. Thank you guys so much for watching. I hope you have a wonderful weekend, and I'll see you back here next time.